Hello, I'm Elsie Lee from Monte Edge Capital. Today, I want to explore the intricate relationship between presidential elections and the Federal Reserve's decision-making processes. Presidential elections in the United States are significant events that not only determine the political leadership of the country, but also have far-reaching implications for economic policy and financial markets. This article delves into how the Federal Reserve, an institution designed to be politically independent, navigates the pressures and influences that arise during these election cycles. We will examine historical patterns, key considerations, and the delicate balance the Fed maintains to uphold its mandate while operating in a politically charged environment. How presidential elections influence the Federal Reserve's decisions. The Federal Reserve, established to oversee and guide the United States monetary policy, often finds itself under the spotlight during presidential election years. Despite its independent status, the Fed's decisions can be influenced by the political climate and the economic narratives championed by candidates. Understanding this dynamic is crucial for comprehending how monetary policy is crafted and implemented in the lead-up to elections. Historical context and patterns. Historically, the Federal Reserve has aimed to maintain a neutral stance during election periods. However, its actions can be perceived as having political implications. For instance, interest rate changes, quantitative easing, and other monetary policies can significantly impact economic conditions, which in turn influence voter sentiment. During election years, the Fed faces heightened scrutiny from both the public and political figures, making its policy decisions particularly sensitive. The Fed's mandate versus political pressures. The Federal Reserve's primary mandate is to promote maximum employment, stable prices, and moderate long-term interest rates. Balancing this mandate with the external pressures of an election cycle is a complex task. Political candidates often promise economic reforms and growth, sometimes critiquing the Fed's policies if they perceive them as hindering their economic agenda. This environment can lead to a challenging landscape, where the Fed must uphold its economic objectives while navigating political rhetoric. Key considerations during election years. Several factors come into play when the Federal Reserve formulates its policies during election years. 1. Economic indicators. The Fed closely monitors economic data, such as unemployment rates, inflation, and GDP growth, to make informed decisions that align with its mandate. 2. Market stability. Ensuring financial market stability is paramount, particularly in the face of potential volatility driven by election outcomes and policy proposals. 3. Communication strategy. Clear and consistent communication from the Fed helps manage market expectations and mitigate the risk of misinterpretation of its actions. Case studies and examples. Examining specific instances where the Fed's decisions intersected with presidential elections provides valuable insights. For example, the actions of the Federal Reserve during the 2008 financial crisis and the subsequent election highlight the delicate balance between emergency economic interventions and political considerations. Similarly, the Fed's policies in the run-up to the 2020 election amid the COVID-19 pandemic underscore the challenges of maintaining economic stability in unprecedented times. The Fed's approach to independence. Despite the pressures, the Federal Reserve strives to uphold its independence. This commitment to autonomy is critical for maintaining credibility and ensuring that monetary policy decisions are based on economic fundamentals rather than political expediency. The Fed's leadership, including the chair and the board of governors, play a crucial role in defending this independence through transparent decision-making processes and robust communication strategies. In conclusion, presidential elections undeniably influence the Federal Reserve's decisions, presenting a unique set of challenges and considerations. While the Fed endeavors to maintain its independence and adhere to its economic mandate, the political climate during election cycles requires a careful and strategic approach. By understanding the historical context, key factors, and the Fed's commitment to autonomy, we gain a clearer perspective on how monetary policy is shaped in the context of presidential elections. Thank you for joining me, Elsie Lee from Monte Edge Capital, in this exploration of the complex interplay between politics and the Federal Reserve. Stay tuned for more insightful discussions on the intersections of economics and policy. Monte Edge Capital is dedicated to providing investors with an excellent trading platform and trading skills education. If you are interested in our services, feel free to contact us at any time. Thank you, everyone.